So the Fed is really in a pickle here, and everybody's trying to figure out what they're going to end up doing. The markets are still in turmoil, so I'll let you know what I've been doing. I'm going to get into the Fed. I'm also going to talk about what I've been doing the past few days, give you an idea of my thoughts on the market. So it should be a really good video. Stick around. Oh, and I'll also update you on rinse, lather, repeat, and what makes sense to me and what I figured out with that.
Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor, on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
Hello, my YouTube friends. My name is Adam Kahn, and this is Investing with Adam K, or Rational Investor, depending on how long you've been watching. Hope everybody's doing well. Today is Tuesday. I hope everybody's doing okay in the markets. Last I looked, they had actually kind of caught themselves and seemed to be going a little bit higher. That'll bring me to the first thing I wanted to talk about what I've been doing in the markets and my thoughts in it. And I'm really using my own advice and trying just to ignore the noise, and I actually deployed some funds in to start buying a few things, and hopefully it works out. But if it doesn't, it doesn't. And to be fair to all the news, as much as I'm tuning it out, the news could become a problem. But a lot of things that are going through my head about it are, I still don't know how it's going to play out. We don't know if the tariffs will come to some, agreement, and maybe they mitigate how big they're going to be. Maybe they even postpone them. Like, we have no idea how it's going to play out. But let's presume for a second that maybe they do go through and there's some high tariffs that play through on a lot of countries that we already do business with, and we see some inflation and prices go even higher. Well, back to videos I did a year ago or so talking about inflation and how that typically impacts companies and earnings and profits. The reality is, this could be the buy of a lifetime. Maybe things don't slow as much as we think. Now, CEOs have been preparing us that the economy is slowing, which would make to rationalize that it's very possible that with higher prices, people really are stretched too far and that could slow things further. Now, all of that is very possible. But predicting the future is really hard, and what I'm going to go with is the earnings have been good. I expect this quarter's earnings to actually be pretty good. I also expect the CEOs to have a really tough time giving forward guidance, and either they're not going to give it or they're likely going to give it pretty bad again and downplay what they expect going forward, because there's a lot of unknown for them too, and they just don't know what's going to go on with the economy, if the tariffs are going to get worse, if we're going to get into a terrible trade war with China. Like, it would be very hard to make those predictions if you're a CEO. Now, the thing is, and the reason I'm trusting just the information coming in now instead of worrying too much about that, is everybody has that information. You have to keep in mind the analytics from these multi-billion-dollar hedge funds or trillion-dollar hedge funds. They're very aware of anything that you and I may know as well. And by the time we know it, they already knew it. They then have an algorithm that factors for everything, including a uh, who knows, but it'll micro analyze down to figuring out the valuations of things, and they factored for all this as well. So they're well aware that earnings are probably going to be good. If they see it, like, they'll have a better gauge on that. Like, I might be wrong, but I'm quite sure they're aware that the CEOs are not going to give great forward guidance, and they may have even been in the position to have direct conversations to have a really good idea of what kind of guidance or what they're going to say about it, or if they'll change their attitude and not even give guidance. So when things are priced, it's pretty accurate to the market that you're in. I've noticed a few times that a bunch of stocks that I keep an eye on seem to have hit a level where somebody's willing to come in and buy them. It looks very scary, they drop, but they keep stopping around the same levels. This is also another reason why I put some money out. I'm hoping that for whatever reason, this is the bottom. The reality is, when I looked at some charts that my brother helped me with, it still looks like we probably have another 10% to 15% to the downside before we even hit some real support. So I wouldn't be shocked to see that happen, and I wouldn't be super shocked to see it to blow through those support levels, take any stops out that were trading against it, and then reverse and go higher. I also wouldn't be surprised to just see it go lower and sit there for a long time, which is why I think the Fed is in a really tough position, or a pickle, or whatever you want to call it. Because the reality is they're not going to do anything until something in the data changes. Nothing in the data has changed. Unemployment came at 4.2, which is just fine. They're still waiting on CPI. They've kind of prepared themselves that there might be some inflation due to the tariffs. The interesting thing is, if it's happened, it's really more companies trying to get ahead of things, which is an interesting scenario. And one of the things that I was kind of hinting at, which is if they're able to pass through higher prices and their margins haven't changed yet, they're going to have pretty good earnings for this quarter because they're going to be able to raise the prices. If things are still selling, they're getting better margins on those products, means better margins, better profits, so on and so forth. The other thing that gives them is if things aren't moving, it allows them to be able to put things on sale because they bought it pre-tariff. They raise the price. They figure they're going to cover the tariff expense now and see how the public reacts to it. And if it doesn't go through, well, they can put those items on sale, lower the price back down. It'll look attractive. And my guess is even if it's at the same price it was a month ago before all this started happening, but it's on sale at that price, it'll look more attractive to people and they'll be able to move whatever items it is that they needed to put on sale. I also don't know how much raising prices is really going to slow down sales. Now, I get it, people are on budgets. But what I said to my buddy Steve, and I talked to him a lot too, as much as I talked to my brother, was if somebody's looking at a Ford Bronco, and I'm making up numbers, I have no idea what the car sells for, but let's say it sells for about $60,000, made up number. If Ford has to raise the price to $66,000, I don't really see somebody not buying that car because Ford had to raise the price. I feel the same way about going out to dinner. If the bill went up $4 or $5 per person on an average ticket at a restaurant, yes, we would all complain. Nobody likes the inflation. I've talked about that in a lot of videos. At the same time, I don't know that that means people stop going. If the bills at the supermarket go up, do people stop buying whatever it is that they buy that they know is overpriced that they like? Maybe it stretches to that point. I mean, I'm the worst person to go to the supermarket with. I walk around everywhere and it all looks too expensive, and I come home with nothing most of the time because I'm just not going to pay whatever it is for whatever it is I was looking at. And the funny thing about that is I'll walk in and be like, Adam, it's $8. Don't even work. Like, just get the thing that you're going in that you want to get. And then I'll walk in, it'll say $8. I'm like, I'm not spending that for whatever. I mean, who knows? So it's kind of funny, even though I'll prep myself, I won't spend the money. So when I say I understand the inflation, I get it. Like, I won't spend things for a pack of gum or whatever either. But it seems like through our data that people still are. So if we have more inflation, I think it's more complaining, but I don't know that it slows us down as much as the analysts are worried about. I think it's this shock and this lack of understanding or knowing what's to come that is just scaring everybody. You add to that how much money portfolios have dropped. And, a lot of people who just have 401ks and things like that, they may not even be aware yet because I don't know that they've even gotten their statements as quickly. As they start getting their statements, they're going to see that it dropped. And maybe we have some selling pressure, but the interesting thing about that is retail business really doesn't tend to push the markets lower. It's the institutions that seem to drive the price. And a lot of time, by the time that you and I are buying or selling something, the institutions are often doing the opposite because they want to take the other side of our trades. I don't know. Either way, I deployed some money because I finally just thought, things look inexpensive. Maybe they go lower, and I hope to deploy more. And then I just have to hope that we don't have some worldwide recession where everything draws down, which I see as a legitimate possibility. And in fact, in the betting lines, from what everybody talks about, it's gone up significantly in the past month. This may have been a huge misstep by the US. It really might have been. I don't know if we've chased our trading partners away. I don't know if we've caused such damage that even if we try to reverse it, we've just upset too many people who we do business with. But you still have to hope that that's not the case, because I do recognize there really are some bad worst case scenarios. We could run into a situation where unemployment goes up because if the stock market comes down enough and earnings start to drop, companies are going to have to let people go. I mean, that is just that is the playbook. That is what happens. I mean, the first things they have to do is look to cutting staff if the earnings are dropping and things are slowing down. Well, if they're letting staff go, you'll have unemployment go up. If unemployment goes up, and this is a little bit of the pickle the Fed's in, well, you would think they would have to cut rates to help the unemployment situation because that's one of their mandates. At the same time, we could see inflation. So you could run into this position where CPI starts going higher. And if we start having to print dollars to get us out of a situation and do too many and see the inflation really spike up, you'll have high inflation. So the Fed should technically raise rates and higher unemployment where they would actually need to lower rates to help. So they get stuck in this really tough position in this scenario that could be really negative, which is also where people worry about some of the stagflation. You know, they're talking about $3,000 iPhones. Well, if that really came to fruition, yeah, we would have a big slowdown. And I've heard it multiple times that there are certain things that you're just not going to get the manufacturing in the US, and it makes sense to me. Like, what are the odds that Nike brings their manufacturing plants into the States to pay American wages to get their shoes out? It's just highly unlikely. There's got to be a better solution for them. And maybe it's not in China, and maybe it's not in Vietnam or wherever it tends to be currently, but they're going to look for an outlet where the tariffs are lower, where the wages are lower, where they can still produce the shoes at the right price to have the right margins and get their profits. And that's not going to be in the US. There might be some industry that comes here and maybe some foreign industries open up plants out here. But the sad thing is as we're making these enemies, I think a lot of them are second guessing if they should even open up in the US because they're worried about our trading future. You know, some of these politicians drive me so nuts, and I don't remember who it was, chairman of something on CNBC this morning, and they become just these rah rah, we're the best type of people. And he talked about 1930 before there was income tax, where it was just tariffs, and how great things were. Or I'm sorry, 1900. And the follow up question is, okay, but in 1930, what everybody's concerned about were tariffs that were put in place. A lot of economists wrote President Hoover saying we see this as a major problem. It then caused a worse recession, which is why we call it the Great Depression, and international trade dropped over 60% over the next 6 months. And they asked the person this, and the response is, we're going to have the greatest country ever, and blah, 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 go team. Like, I wish some of these guys would do a better job of actually fielding the question and responding and handling things maturely and saying what they're worried about, what they're excited about, instead of just constantly this go team, I'm the best, I should be the politician. Either way, I decided it was time to just stop listening to the noise, see that things were what appeared to be a good valuation because it seemed like somebody was buying, and put some money back to work. Hopefully it works out. I guess we'll see as the day plays out. What are your guys' thoughts? I think most of you just dollar cost average. And out of curiosity, what stocks are you looking at? Or are you just doing ETFs? I still stick with individual stocks and generally the same ones. Netflix, Amazon, Google, Meta. I actually added Spotify, but really, oh, I better say this because especially on this one, please do not use any of the information I share as financial advice. You need to do your own research and reach out to your own financial advisor. I am just a guy on YouTube talking about what works for me, and this should be seen as entertainment purposes only. Because what I was about to say is, in terms of Spotify, it's not like I've done the analysis I really should on it. I really just bought it because my son, who I've mentioned before, he's 14 years old, and he pretty much lives on Spotify. I mean, that's where he listens to his music, so do his friends. And I kind of figure if there are that many kids who are on a certain platform, well, that's longevity. That means it probably works for a while. I mean, he's going to be on there at least through graduation of college, I would think. So you're talking about at least 8 years of growth. And I would think longer if that's what all the kids are doing. So, like I said, kind of a stupid reason. I'll probably go do some research. I do know that the price to earnings ratio is extremely high, and I typically don't like buying that stuff. So I didn't buy a lot of it, but I did think since he's on it all the time, maybe it's a good one to invest in. So I added a tiny bit of Spotify. I really did put on a nice position in Netflix because, like I've said a bunch of times, I kind of think that they've got a good moat. And I think even if we have a recession, they might do surprisingly well because I don't know how many people are going to cancel a Netflix subscription because the economy gets tough. Quite honestly, we have Netflix. We have the lowest plan because I don't really mind commercials. I grew up with them, and it's $8 a month. I don't know that something's going to come around that's going to cause me to just stop spending the $8 a month. The other thing is, if you could do me a favor, if you haven't already, smash that like button, hit the subscribe button, make some comments in the comment section. I really appreciate that. And as you guys know, that helps YouTube's algorithm. Um, and it helps other people find the channel. So, either way, I decided to ignore the news. I do worry that the stuff with China is going to totally blow up because I feel like it's two people with big egos, or at least one who doesn't seem to understand how China negotiates. Because I really think they'd put their country in a recession before losing a battle with another country. A lot of times their personality is more about saving face than anything else, and they're just not going to let the US push them around. I mean, that's just not who they are. Anyway, have a great Tuesday. I do want to go watch the markets. I'm going to try to get this posted. Um, Hopefully, I didn't miss anything too exciting in them. Have a great day, and I'll talk to you guys soon. Geez, I know I said I was done, but I flipped off the camera and went and looked, and the market is taken off. I'm not even sure what for. I hope you guys have been invested. I'm going to go see what the news is, and hopefully everybody had an awesome day, and hopefully it follows through. Have a good one.